It's been a great 18 months for stock markets since the March 2020 lows, continuing to push higher. But there is still the nagging doubt about inflation. So if that ends up being more of a problem, what could be some interesting value stocks to weather any potential storm? I don't know if you saw the video we did a couple of days ago. It's well worth taking a look at, looking at inflation historically, and clearly it is an increasing worry, I think, for investors at the moment. So I thought, well, let's take a look at the three value stocks mentioned in that video. Bank of America, Berkshire Hathaway, and JPMorgan. Look at the numbers in a bit more detail, talk about them, and then come back and look at their charts.
Hello, I'm David Jones from Capital.com. And if you saw the video we released a couple of days ago where we looked at inflation, one of the topics in that video was looking how value stocks may compare versus growth stocks if we do have a period of high inflation and perhaps stock market investing gets a little bit trickier. So I thought in this video, let's take a look at the three value stocks we mentioned when we were looking at inflation. So we're going to take a look at Bank of America, Berkshire or Berkshire Hathaway, depending on which side of the Atlantic you're on, and JPMorgan. Look at them in a bit more detail, look at the recent news, and then have a look quickly on their charts. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And it means we can continue to push out what are hopefully interesting videos on different market topics throughout the week. Right, let's kick things off and get started having a look at stock number one, Bank of America. So what does Bank of America do? Well, it's a US investment bank and financial services business. It's the second largest bank in the US after JPMorgan and the 8th largest bank in the world. We will be having a look at JPMorgan as part of this video. We've recently had earnings from Bank of America, came out in October, earnings for the third quarter. The market was expecting earnings of around 71 cents per share. And these expectations are normally closely watched to see, well, does the company meet, beat, or come below expectations? Comfortably beaten by Bank of America, around 20% higher than where the market was expecting. Third quarter earnings coming in at 85 cents per share. So let's look at the PE ratio. So price to earnings ratio, one way that some investors will try and value companies. You could say that Bank of America's PE ratio is high for the sector, not really that high for the market as a whole, but its PE ratio comes in around 14. This compares, if we look at some of its peers, Citigroup has a PE ratio of 7 and JPMorgan has a PE ratio of around 11. So Bank of America is somewhat at the higher end of that. So at the time of recording, the stock is trading at around $47, best levels in more than 14 years. So that does give you some insight into the sort of year it's been. Analysts, we've got a mixed bag of analysts' forecasts for the stock. So the stock is about $47. The next 12 months, analyst forecasts range from $55 on the upside, so we're about 20% higher than where we are now, down to about $35 on the downside. So a fairly wide spread of forecasts there. But from a trend point of view, the trend is up. You know, it's been a great performer this year. Bank of America stock is up 55% year to date. Is there going to be more to come? Let's take a quick look on the charts and the technicals in a bit more detail.
So here's the chart for Bank of America going back about almost 5 years, actually. And you can see just the strength of the move since those March 2020 lows, trending higher until November last year, so about a year ago, and then really took off, breaking out through the early 2020 highs. We saw that happen earlier this year in February of this year. And since then, it's continued to push higher. And here we are trading at what are the best levels since 2007. So a great performance. If we pick up on this latest bit of the trend, since it broke out again in October, so just over the last few weeks, breaking out through those June highs, that latest acceleration, I suppose we could call it, of the trend coming in just ahead of $40 for the stock. So even if we saw some volatility and some weakness from there, it still looks from a charting and a technical analysis point of view, a buy the dips kind of stock. For me, the most important short-term levels to watch would be those lows from early October. They're coming in just below $42 a share. So for me, the whole 38, if we pick up on those lows there, the $38 lows from late September through to about 42. Seems like a good zone if we did see broader market weakness and investors get spooked, to watch to see if Bank of America dips back to there and the buyers come back in. But overall, this trend is still strong. You know, we can't really argue with a stock at the moment that is still pushing out to fresh 14-year highs. Lots of momentum behind it. So an interesting one, I think, from both a short to medium term trading point of view, and also for the more longer term value investors looking for perhaps something a bit more defensive if markets get trickier.
The next one we're going to look at is Berkshire or Berkshire Hathaway for our transatlantic cousins, famously run by Warren Buffett, often referred to as one of the world's most successful investors. So it's a US multinational holding company, and the approach is very much of value investing. There are a few different ways that we could break down value investing in Warren Buffett's overall approach, but traditionally it's thought of where looking for companies where the stock price, the price the company's trading in the market, just seems too low based to the intrinsic value of the company as a whole. So Warren Buffett is normally trying to buy great companies at relatively cheap prices to where the market thinks they should be. Berkshire Hathaway also bought back quite a lot of its own stock this year, which some people could view as a positive. It's reinvesting and buying back its own stock to have more control of its own company. Bought back something like $12 billion of its own stock in the first half of this year. I think during the dot-com bubble back in the late 90s, early 2000s, I think Warren Buffett famously shied away from this area of the market, couldn't see the value there. Eventually, of course, that approach was proved right as the bubble burst. Things have changed since then. If we look at the largest holding in the company's portfolio, in Berkshire Hathaway's portfolio, is Apple, of course, tech stock, and it accounts for about 40% of Berkshire's portfolio at the time of recording. The next biggest holdings, some other big value companies, big well-known names, Bank of America, American Express, financial companies obviously, and Coca-Cola and Kraft Heinz. But these four companies together still aren't quite as big as the value that Berkshire Hathaway has in Apple. Now, from a price to earnings ratio point of view, PE ratio point of view, it looks cheap. It's got a price to earnings ratio of around 6, which again, if you compared it with the broader market, that does look very cheap. But analysts do expect earnings to decrease in the years ahead. That's their view. So that's, I think, one reason why perhaps we're not seeing the stock soaring away recently on this relatively low price to earnings. But as usual, let's take a look. Let's have a look at the performance, take a look at the charts and see what the technicals look like.
So here's the stock of Berkshire Hathaway. This is the B stock. So it's a fraction of the larger A shares with fewer voting privileges. But you can see the performance over the years going back, about 5 years or so for the stock. Again, another great performer, of course, since the 2020 lows as markets continued higher. But it has struggled over the last, 5 months or so. So although broader markets have continued to push out to fresh all-time highs throughout the summer, it's not been the case for Berkshire Hathaway. So we can see the stock here trading at 289. That trend off the March 2020 lows clearly still up. Trendline support coming in ahead of $250. It's been somewhat range bound. We can see the top of the range since May in around 295, good support at 270. So we've seen it trade in pretty much a 10% range over the last few months or so. I think, again, from a technical point of view, if we saw it break out through 295, it looks like the classic chart breakout. But even if we saw it weaken, if we saw broader market weakness from here, for me, I'd be watching that trend line from 255 to 270, the 270 recent lows. So still an interesting one. The big trend since March last year is still definitely up. A bit of a disappointing performance perhaps over recent months, but still broadly positive. And another one where even if we saw weakness from here, from a chart point of view, it still looks like a buy the dips.
So the last company we're going to look at, JPMorgan Chase, another investment bank and financial services company, and it's actually the largest bank in the USA. Like Bank of America, we've had recent earnings from JPMorgan as well. Like Bank of America, these beat expectations. So the market was expecting earnings per share of around $3. They came in actually at $3.74. So more than 20% better than the market was expecting. If we look at the P ratio of JPMorgan, it's around 11, which compared to its peers, Bank of America at 14 and Citigroup at 7, it's pretty much slap bang in the middle of those two. So a fairly average PE, you could say, for the big banking companies. It's been a good year for the stock. Most analysts do appear to still be positive on the stock. It's trading around $170 at the moment. Barclays and Goldman Sachs both have targets for further growth from here over the next 12 months, nudging towards $200. So again, expecting more upside from the stock. It's been a good year so far for JPMorgan. Investors have seen a return of around 35% year to date. And again, at the time of recording, the stock is trading near all-time highs or at all-time highs. So as usual, to put all this into context, let's take a look at the charts.
Here's the chart of JPMorgan. I've got this going back to pretty much just after the financial crisis when the stock was trading down around $41. And here we are at $172 for the stock. If we zoom in on what's been going on since March of last year, another clear recovery trend. They did a good job, 4 touches up until about October of last year. And then it's accelerated away. So the stock has pushed higher, somewhat sideways from June through to late September. And even as we're sort of recording this now, we're seeing the stock breaking out to these fresh all-time highs. So looking like it is breaking out from this recent range it's been in. So that the bottom of the range, the big support is down at 145. So about, what's that, $27 lower than where we are now. So we're good 15% away from where we are now. On the downside, more recent support has come in around 160, then support back at 150. So overall, it's still positive, considering the fact it is moving out through the top of this recent range. Now, are we seeing a new breakout started? So again, from a momentum trend point of view, it's an interesting one. I think if we were looking at targets, I don't think it's perhaps too ambitious to start looking at $200 as the potential next target, assuming this breakout is going to continue. And even if we saw broader market weakness and the stock got knocked back, lots of support running from that 145 through to 160 area.
That's it for this update on these 3 value stocks. Just looking at the numbers in a bit more detail, following on from that inflation film that came out over the weekend. If you haven't seen that, go back and take a look at it. We'll do more updates this week. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading.
For more trading videos just like this, please subscribe to our channel.